Most people lose money in trading. Most people lose money in trading. But have you ever noticed that smart traders seem to make money in any country, any market, and in any condition? Today, I'm going to pull back the curtain and show you exactly how they do it. Trading is not a casino game. It's not gambling. It's a skill, just like learning to drive a car or speak a new language. And here's the most exciting part. The fundamental rules of trading are universal. They work in the United States. They work in Europe. They work in Asia, Africa, South America, everywhere. The principles are the same whether you're trading stocks in New York, forex in London, or cryptocurrencies in Tokyo. Why? Because all markets are driven by one thing: human psychology. So let's dive into the biggest, most common mistake that almost every new trader makes. It's the reason why so many accounts get wiped out within the first few months. The mistake is emotional trading. Beginners often buy because of FOMO, the fear of missing out when they see a price skyrocketing. They get greedy, hoping it will go up forever. And then, when the market turns, they sell in a complete panic, locking in a loss. Professional traders, on the other hand, operate from a completely different mindset. They follow a strict set of rules, not their gut feelings. They have a plan and they stick to it, regardless of the emotional roller coaster. This leads us to a core concept you must understand. Markets are a reflection of human psychology. Every single candle on a chart, every uptick and downtick is a footprint of collective human behavior. It's a battle between fear, greed, hope, and patience. Charts aren't some kind of magical crystal ball that predicts the future. They are simply a visual representation of the supply and demand created by the thoughts and emotions of millions of traders around the world. This is precisely why technical analysis and price action patterns work in every country and on every asset. The language might be different, the currency might be different, but human nature is the same everywhere. Greed looks the same on a chart in Japan as it does in Germany. Now that we understand the problem is emotion, what's the solution? The solution is to trade with a set of simple, unbreakable rules. Smart traders live and die by these principles. Let me give you the 3 most important ones. First, always trade with the trend. Trend is your friend. It's like swimming in a river. It's much easier to swim with the current than against it. If the market is clearly moving upwards, you should be looking for opportunities to buy. If it's heading downwards, you should be looking for opportunities to sell. Fighting the dominant market direction is a surefire way to drain your account. Second, only risk what you can truly afford to lose. This is non-negotiable. Before you even think about how much money you can make on a trade, you must first decide how much you are willing to lose if you are wrong. Trading with money you need for rent, for groceries, or for your family's well-being will force you into making emotional, fear-based decisions. Your trading capital should be risk capital and nothing else. And third, never ever enter a trade without a plan. A trading plan is your roadmap. It defines exactly where you will enter the market, where you will place your stop loss to protect your capital, and where you will take profits. Trading without a plan is like setting sail on the ocean without a compass or a map. You'll just be drifting aimlessly, and eventually you'll hit a storm. If you break even one of these 3 rules, you open the door for losses to pour in. Let's talk about the real secret weapon of profitable traders. It's not a magic indicator or a secret algorithm. It's something far less glamorous but infinitely more powerful. Risk management. Most beginners are obsessed with how much they can win. They dream about that one huge trade that will make them rich. Winning traders, however, are obsessed with how much they can lose. Their primary focus is on capital preservation. They understand that defense wins championships in trading. Think about it this way. They risk small amounts on each trade, often just 1% or 2% of their total account balance. This means they can be wrong multiple times in a row and still be in the game. They lose small. But when they are right and the market moves in their favor, they let their winners run. They win big. This concept is called asymmetric risk to reward. You risk $1 to potentially make $3, $4, or even $5. This is how trading accounts survive and grow over the long term. It's not about being right all the time. It's about making more money when you re-right than you lose when you re-wrong. This brings me to my next point, which might surprise you. Consistency beats strategy. You do not need the world's most perfect, complex trading strategy to be successful. In fact, Many of the most profitable traders in the world use surprisingly simple methods. A simple strategy, like trading pullbacks in a trend with a clear entry and exit rule. When executed with discipline and consistency, time after time, is far more powerful than a complicated strategy that you use emotionally and inconsistently. Your edge in the market dose come from having a strategy that no one else knows about. Your edge comes from your ability to execute your chosen strategy flawlessly, over and over again, without letting fear or greed interfere. It's about building a habit of discipline. It's about treating your trading like a business, not a hobby. You follow your business plan every single day, whether you feel like it or not. So let's bring it all together. Your success as a trader has very little to do with where you live, what language you speak, or even how much money you start with. A small account traded with discipline will always outperform a large account traded with recklessness. Your success depends on your discipline to follow your rules, your patience to wait for the right setups, and your commitment to continuous education. The market doesn't care about your background. It only rewards good habits. So, my advice to you is this. Learn slowly. Don't rush the process. Start with a demo account to practice your strategy without risking real money. Focus on mastering the process, not on chasing profits. Trade smart, not emotionally. And when you do, you can let the market work for you, not against you. If you found this guide helpful and want more practical global trading tips that work in any market, do me a huge favor. Hit that like button, share this video with someone who needs to hear it, and make sure you subscribe to the channel for our weekly trading education. Thank you for watching, and happy trading.